Charlie, hi. It's good to have you with us. How have you been?
Good, good. How are you?
Doing very well, Charlie. I hope everybody is safe, at home, at office around these difficult times.
Yes, actually, as you know, we have had hard time in
Yeah,
April, May, but now everything is much better, especially in Indian office. So it's good. It's very good for now.
wonderful.
Thanks for asking.
Wonderful. Good to hear that, Charlie. Charlie, this is a discussion that I'm particularly excited about, right? Because I think when you talk of the India market, right, I think fintech has a very, very large role to play, right? And I think fintech, when we look at it, right, has largely been celebrated for the work that it's done largely on the loan side of things, right? Basically increasing the velocity of capital, right, availability for businesses, individuals, right, so that the transaction could become so much more faster, right? But when I look at True Balance, right, there are many things that you're doing, right? You're essentially sort of operating as a supermarket for all financial needs, right? Where you're essentially sort of focusing on a 360-degree management for a business or a consumer, right? And I think that's a very different perspective, right? So in that context, I've actually been looking forward to this conversation, right? Because there are many underlying factors that are common across all of these financial product requirements, right? And I would love to discuss some of those pieces with you. But before we dive into that, Charlie, it'll be lovely for us to have a quick round of introduction about yourself. You've been out there, you've been a work professional for a reasonably large time. Tell us a little more about yourself, and then we dive into the questions for the session today.
Yes. I'm very happy to hear that question first. Many many Indian friends actually ask me like how the Korean guy actually ended up having been in India.
Right, right.
So my Indian journey began in 2001.
Wonderful.
Actually, I was working for the Real Networks company, which has provided Hello Tunes. The
Mm-hmm.
Hello Tunes for the Airtel, right?
Of course.
When you call, actually you listen to music.
Right.
So I was the head of Asia business at the time in the Real Networks.
Mm-hmm.
So we provided Hello Tunes to Airtel, and
Wonderful.
then the other actually we provide to Idea and Aircel and BSNL, all other
Right.
actually. So that's how my actually Indian journey began.
Wonderful.
And then, it's almost 20 years my
Right.
Indian journey,
Right.
and then many Indian friends actually call me. Some friends actually call me half Indian, but some other actually my genuine Indian friends call me a genuine Indian
Right.
because they see that as a foreigner Indian, actually
Right.
they see that I understand the India, and then I see the India more objectively, and then
Right.
especially from the business point of view.
Right.
As you have seen, my company's mission is the financing the next billion,
Right.
finance for all.
Right.
So we are to provide the finance services to the next billion users
Mm-hmm.
who are not out of the digital finance and finance service for now.
Right.
So we are focused on those users, and
Right.
then we are more happy to solve these financial issues of the billion people in India.
Right. Very interesting. And I think, Charlie, the fact that you've been here since 2001, right? I think, and like you said, right? You know more India than many other people, right? Because when you're coming from the outside, there's a possibility of observing the country in a more objective way, right? But I think you've seen the most critical time, that we've had in India, right? You've seen those most critical cycles that we've been through, right? And us entering into that demographic dividend space, right? Something that is talked about not just locally but globally, right? As a market opportunity that is, right? No, I think that's a fantastic one to hear from you, Charlie. Charlie, we're gonna move into talking more about True Balance, right? And I think, like I said right at the outset, there is a lot that you're doing. There is some very interesting stuff that you're doing, right? Help us understand a little more about True Balance, right? Tell us the construct of it. What are some of the key priority areas? Given that you're a very large supermarket like format when it comes to financial services products, right? Tell us a little more about True Balance, and which are, like I said, which are the key priority areas, and how are you going after this, right? So, what's your market acquisition strategy in that sense?
Yes. Actually, I founded this company together with my co-founders in 2014 July,
Okay.
and then when we founded this company in 2014,
Right.
we have seen actually this thing is happening for all other fintech companies,
Right.
like Paytm and PhonePe and a lot of major ones.
Right.
They start their service from the mobile recharge business.
Right.
Because the 1 billion people in India, they use the prepaid, and
Right.
then they recharge 4 to 5 times a month.
Right.
So 1 billion people, 4 to 5 billion traffic a month.
Mhm.
That's huge. That's one of the biggest actually traffic and user base in the world.
Right.
So we have seen that this mobile recharge is the very good, very big gateway
Right. Right.
for financial services, but
Interesting.
especially for our target users. From the day one we launched our service,
Right.
we didn't actually target the we call India One. India One
Right.
is like some high profile 200, 300 million people who
Right.
use freely the online payment, and then who use the credit service
Right. Right.
from the bank. We are very specifically targeting 1 billion people who are majorly using cash.
Right.
Then they're using smartphone, but actually they don't have enough credit.
Right.
Sometimes they have no credit, so that they can not get any finance, and then the loan service.
Right.
So from the day one we launched, actually we specifically target for those users.
Mhm.
So after we introduced the mobile balance checking and then recharge,
Right.
we expanded our service to bill payment, and then the e-commerce and insurance, and then the train ticket service. And then finally, actually, we open our lending service based on our own MBFC license. So we
Interesting.
got the prepaid instrument PPI license to 2016, and
Mhm.
then we got the MBFC license in 2019.
Okay.
So we, based on these two license, we started my full-fledged financial services.
Mhm.
But as you know very well, actually one of the strongest actual financial services to provide a benefit to users,
Right.
and then the biggest actually business model for
Right.
financial companies is lending.
Right.
So after we started our own the lending service from 2019,
Mhm.
we are very highly focused on the lending microfinance.
Okay.
And then, this microfinance lending is a very small ticket size. We
Right.
started from 1,000 rupees
Right.
to 50,000 rupees only.
Mhm.
And then tenure is also not that long, from two
Right.
months to 6 months.
Mhm.
So we are highly focused on very small ticket size, and then comparatively shorter tenure product,
Right.
because our users, they need this kind of a lending.
Right.
So we are very focused on those micro lending service for now, and then we are growing very fast for now.
Right.
So and then even though we are very focused on lending, as I told you, like we are full-fledged, financial platform.
Right.
So we are providing recharge for our lending users, and then bill payment users, and then e-commerce insurance as well for the very small ticket size, e-commerce and the insurance as well.
Right.
So we are the synergy between lending and other financial services for now.
Very interesting. Charlie, when I look at the India market, right, and I'm sure this is something that you also sort of experiencing, right, is that India market is very low in terms of digital footprint, right? So, for example, you spoke of India One, right, or the tier one market, like we put it, right, or that the way we dissect it. That is a market which has been very adaptive and adoptive to, in terms of say mobile consumption, transactions, comfort, lack of inhibition, right, less cultural issues. But as soon as you start to, kind of dissect the country in a tier two and a tier three market, right, which is say Bharat two, like it's been called in certain reports, right. That's where the complexity increases, right. And that is a part of India which operates in many many layers, right. So we are essentially like many countries packed in one, right. But you have to design for each one of them separately, right. I mean, there are certain factors that are homogeneous in nature. For example, mobile recharge is homogeneous, right. But when you go to when you want to build anything which is say related to consumption on top of it, that requires a very different kind of focus, right? How are you solving for that, and what are some of the key challenges that you've faced? I mean, you've been here for a reasonable amount of time. 2014 was essentially a very distinctive year because it brought in the mobile revolution. It kind of changed the market in its true sense. Data became key. All of that was happening, right? So, what are some of the challenges that you've kind of faced? And how do you think 2020 is going to be a pivotal year when it comes to the new canvas for India, or the new possibilities for India?
Yes, it's very interesting and very important question. you're absolutely correct. Actually, my target markets, like in next billion
Right.
users, they are. It's very hard to crack it. You
Right.
know, we are. Of course, smartphone is the first one. Actually,
Right.
as we see the smartphone booming now. It's 500, 600 million. They are
Right.
using smartphone. So every year it's like a 50 million up to 100 million new smartphone coming. So, but these users actually they even many of them actually they cannot pay online.
Correct.
Many of them they have bank account, but only 12-13% of the bank account users they freely
Right.
use it. So what we actually approach is that our users they cannot actually, as I told you, like the epitome, the gist of the finance is the lending, and
Correct.
then with this lending actually they can transform their economic life.
Right.
So to provide this the lending, it was very challenging.
Mhm.
Unlike tier one India one kind of people, they
Right.
don't have financial data, they don't have any CB
Absolutely.
score.
Right.
Yes, so very, very hard. So that's why actually from the day one we launched our service, we
Mhm.
try to collect our users' data,
Right.
our application log, and then their SMS data, all kind of data from the application. Thanks for Google's open ecosystem,
Right.
we could access some data if they agree to
Mhm.
provide us.
Right.
So from day one, we launched our service. We collected a lot of our users' log and data.
Mhm.
So we have now actually more than like a 700 terabyte data
Wonderful.
of our 80 million download users.
Right.
So what we have done is that we built up our alternative credit scoring system. We
Mhm.
call it ACS.
Okay.
This ACS actually we are not actually dependent on the any kind of financial data,
Right.
like bank statement. Many
Sure.
actually digital lending companies they ask a bank statement,
Right. Very
but
interesting.
we don't ask that.
Right.
Based on all application data, what kind of application they are using, what
Right.
kind of SMS they actually getting from
Right.
the recharge related and the payment related, whatever we collect, and then what kind of a location where they live, and then they have a regular movement for the night and daytime, so that actually we
Right.
can project they have a regular job or not, and then many kind of social behavior data, how
Right.
many regular person they have, they make a call and then they send SMS. So all kind of this alternative data,
Right.
we built our own ACS, and then all our actual lending service is based on this ACS modeling. This
Okay.
is machine learning based alternative, modeling,
Mhm.
unlike traditional financial
Right.
data-based, modeling. So based on this, actually, we have been providing basically two major lending services. First
Mhm.
one is cash loan. Second one is level of loan. So
Okay.
level of loan is more like lower ticket size,
Mhm.
and then we have grown like almost 1,500 times, 1,500% increase
Right.
this year for this level of loan. So 15
Mhm.
times, more growth compared to the early of this year. So we are growing very fast, focused on those small ticket size, and then this ACS based, modeling. And then also we are managing the risk very well. Our DPD 30 is less than 10%, which is
Okay.
almost the other digital NBFC companies. So
Right.
given that we are dealing with a little bit risky group, we are managing our default. DPD 30 is also very good.
Right.
So that's how we are actually approaching this target market and users, and
Right.
then how we manage our risk.
Very interesting. Charlie, that's a very interesting model that you highlighted, right? Because this is something that we've been talking to many people, right? I mean, if you look at Indian fintech companies and and many stakeholders in the Indian financial ecosystem, right? Especially on the lending side of things, they are essentially and largely dependent on CIBIL-like scores, right? Which are very two-dimensional in nature, right? What you are talking about is a very evolved, framework of assessing and understanding a consumer, right? And a consumer behavior. And I think it's become all the more important in a 2020 kind of an environment or post 2020 kind of an environment, right? Because the kind of influence that is there on a consumer is so much more now, right? Because of the content that they're consuming. Thus, it becomes important to understand them at a preference level, right? Rather than on a past performance level, which I think is also what you're highlighting, right? And this is essentially how your say the credit rating and credit understanding system is kind of designed, right? But Charlie, one question that I have, right, is that when you're looking at many people in the lending ecosystem, in the fintech lending ecosystem, right, a lot of them also behave like marketplace, right? So they're not necessarily deploying it from their own book, right? And they have FLDG arrangements with other financial institutions, right? And their NBFCs typically work as a co-lender in the process, right? What are your mechanics? I mean, are you deploying this capital purely from your own books, or you also have partners and you have FLDG arrangements with your partners where they come in and jointly extend, these loans when you are making or extending that facility to say a customer or a business?
Yeah, actually, we are partially working with the partners for this
Right.
lending dispersal, but we are
Right.
majorly focused on our own book-based, dispersal because, all this, our business comes from our two nature
Right.
and then two comparative edge point. The
Mhm.
first one is that, and as I told you, like we are highly focused on a little bit unique users.
Mhm.
Actually, our target users, like their monthly salary is from like a 7,000 rupees to around
Interesting.
30,000 rupees only.
Right. Right.
So we are kind of targeting kind of a low profile
Right.
users compared to other players, so
Right.
that actually we cannot count on CIBIL score or
Got it.
any other financial score only. That's
Right.
why actually built up our own alternative credit scoring system. So of course, we are raising some debt from the renowned, banking guys and then MBFs guys. But because we are very focused on very unique user base,
Right.
we are fast actually. We are planning to expand our lending
Right.
through our partners as well for the
Interesting.
initial stage because of the nature of our users, because of the
Right.
nature of our product. We are
Right.
very focused on our own book-based, lending. And then second one is that unlike other digital lending players, actually there are very big and good digital lending players out there.
Right.
But we are not just in a lending player. As I told you, like we started from our business from recharge,
Right.
and then the payment, e-commerce,
Right.
insurance, all the kind of financial services are available in
Right.
our platform. So we are making synergies between this lending and other services.
Right.
From the nature of the lending, people are not supposed to visit the application
Got it.
frequently
Right.
because they get the loan and they just repay once a month.
Sure.
But our services we provide recharge, bill payment, commerce, insurance, and others. So that
Interesting.
actually our retention, our the app visit rate is much higher than others. That helps us to manage our low actual delinquency, and then we
Right.
are making additional revenue from those services as well.
Right.
So for these two actually factors, we are
Mhm.
very focused on our users, the user base, building
Right.
and the product fit building for now.
Right.
That's
Right.
why actually we are focused on our own book-based lending for
Mhm.
now. But definitely, we gradually actually already started with working with other
Right.
companies to disperse the loan.
Right.
And then in near future, we are planning to provide our own ACS scoring to
Mhm.
other players as well. So we have a definitely plan to expand our business together with the partners for
Right.
lending and services.
Very interesting. Very interesting. And I see that the model is evolving, right? And I think it's taking a very different kind of a shape, right? And which is a more continuous shape, right? Charlie, one question that I have, right? And this is something that I highlighted in the past as well, right? Is that India operates at many levels, right? Like we discussed, tier one, tier two, tier three, right? India operates at many levels. Now, what happens in a case like that when you are creating, a credit rating system or a credit, say, understanding or profiling system, which is built on preferences and influences, right? And say lesser, or for example, on financial transactions and and that side data, it becomes complicated, right? So that essentially means that for say a Maharashtra, it's going to be a different kind of a model or very different prioritization. For say a North India, a state like say Delhi, it's going to be different. For a state like Karnataka, it's going to be different, right? How have you been able to achieve the product market fit? Because I mean, you understand where I'm coming from, right? It's a very different ecosystem. It's a complicated ecosystem in that sense, right? So how have you gotten to that product market fit in that sense?
Actually, it's very good question. We have our own ACS, alternative credit scoring model, and then we give scoring to our users. But it differs by area, by job, by age, and by many things, especially for the Corona situation. how the corona situation is serious or not. So depending on those various multiple factors, we give different credit score to different users. For example, like, last year, Andhra Pradesh and then Telangana, when the Chinese app issue happens, and then actually we give a different score to those users, to those areas.
Yeah.
So also the salary or non-salary or job profile, like a student or wife, and then some kind of some other factors like repeated users and new users. So we have a various scoring by various group of users. So almost every week we updated our rule. We call it the rule update.
Okay.
Based on the ACS, the credit scoring,
Right.
we apply the different rules for different areas, the group users. That's
Interesting.
how we are managing it.
Very interesting. Very interesting. Chari, what's your sense, right? I mean, when you're looking at lending, right? Of course, business loans as a category is increasing, personal loans as a category is increasing, right? But there's a huge surge which has come in, of payday loans and small tenor loans, right? How are you viewing that as a market, right? How are you viewing that as an opportunity? What's the thesis around that?
As I told you, like, our target users, they're like, their salary level is like, even most of them are not actually monthly salaried
Right.
users. They
Right.
are getting paid on daily basis or weekly basis or bi-weekly basis.
Right.
So, and then their salary level is like around from 7,000 rupees to 30,000, 40,000
Right.
rupees. So for them, they don't need actually very big money for the very longer, term.
Got it.
So most of our users actually they need like less than 10,000 rupees,
Sure.
and then they need the money like less than 2-3 months. So I think we are very proud that we are kind of one of the first players to get
Right.
into this market. And
Right.
then because it's very hard to give them the credit because
Right.
they don't have enough financial data.
Right.
But our ACS actually we managed to provide kind of our own credit scoring
Mm-hmm.
to our users. Based on that, actually, they can get the loan. So, I want to put this way: our service is to try to make 0 to 1 kind of service. All other services they are making very good, improvement.
Right.
They are making very good the service, but for them actually it's like from 1 to 2 or 1 to 3 kind of a service. But for us, we are trying to make the 0 to 1 kind of concept. So before our users, they couldn't get the service at all.
Right.
But now, thanks for us, thanks for our ACS, and thanks for our application, they could get the service. So I think that's the kind of a thing we are very proud. And then how we are focused on those users, how we are managing the business.
Very interesting. Charlie, when you're looking at India, right, and especially the segment that you're talking of, right, one big problem in that segment is that of recovery, right? And that is largely because these are people who are new to credit, for example, right? And also the fact that traditional institutions haven't lent to them, right, because of the inconsistency in incomes, right, and that makes it very difficult. I think the overall understanding of the persona becomes very difficult, right? How are you tackling the recovery bit? I mean, given that this is the target segment that you're going after, how are you ensuring that there is an adequate recovery which is happening, right? Because that's something which a lot of businesses have struggled with, right?
Yeah. Yes, exactly.
What is the mechanics there?
Actually, by the end of the day, basically this lending business is everything about risk management. Everything is about recovery.
Right.
Depending on your recovery strategy and the recovery performance,
Right.
our business will be plus or minus.
Right.
So that's one of the most important critical ones.
Right.
So what actually we are approaching is very interesting. We are approaching this because our ticket size is small, so we cannot utilize offline collection efforts. We cannot count on.
Right.
So what we try to build up is that like application based technology based approach. So for example, like our the one of the loans, so called level loan. That level loan is like as you can see the from the name, our users need to repay on time to level up their credit.
Okay.
So we designed our service, in very many aspects in our app that we try to give the benefit in the
Mhm.
application itself.
Okay.
The benefit once they repay well
Right.
in on time, then actually we improve their ticket size, and then we give some credit score
Oh,
to them
interesting.
so that they have a very big incentive,
Right.
motivation to repay well. So that's kind of the major ones we are designing. We believe that the 70% of the collection is already decided
Right.
when we
Right.
so the modeling is basically the first thing we need to focus as
Mhm.
far as the collection is concerned.
Right.
Only 30% is gonna actually play the role for the collection efforts. So
Mhm.
for the underwriting model, actually we focused on the ACS build up
Right.
upgrade. And then the collection, actually we design our app, technology and application UX based actually approach to
Right.
collect. That's why actually we are managing our risk
Mhm.
DPD is
Right.
very well.
Very interesting. Charlie, 2020 has been a very unreal year, right? And not just in India, but globally, right? I think, economies like India have been exposed at a slightly different level, right? Because, and like I said, right, we operate at many, many levels, right? There are many, many stratas of society, right? And we have to deal with a lot of regional complexities as well, right? But one thing that has actually stood out, right, is essentially the way we look at it is that given that everybody was consuming from the same source, which was essentially either your mobile screen or your phone, or your TV screen or your laptop screen, right? There's a certain sense of predictability and homogeneity that is now coming to come into the consumer, right? And this is not just which is something which has happened in say a tier one part of the country. This is something which has happened across all the tiers, right? Tier two, tier three, tier four, right? So there is a certain sense of homogeneity which is coming. There's a certain sense of influence which is coming, which also you highlighted that you kind of factoring it and you're kind of understanding when you're understanding a consumer at that level, you're factoring in those things, right? What are some of the other, I mean, and this has also been a very interesting time because it's brought in very very opportunities, many opportunities, right? In terms of being able to go out, lend, insurance, so on and so forth, right? The sensitivity of the consumer is of a very different nature today, right? How are you viewing this, right? What's the true balance way of looking at this, say the opportunity, right, which has come in the post-COVID India?
Actually, of course, Corona, especially last year, the moratorium
Sure.
has a very big impact in our business as
Right.
well.
Right.
So last year, actually, our business was not that good. But,
Right.
actually, India has managed to overcome, even though we had a very serious
Right.
Corona situation in this April and May.
Right.
Actually, we already have experience last year, and then
Right.
also India experience in last year. So
Mhm.
from the economic, point of view, this
Right.
year was not as serious as last year. So
Right.
we have met well. And then another thing is that, the smartphone users, smartphone is the thing.
Mhm.
Smartphone is like 500, 600 million people already using in India, the smartphone. It's a big thing.
Right.
But if you see the details of the smartphone users,
Mhm.
it's very different. For example, some users, many of users actually, they
Right.
use Facebook, WhatsApp, and casual games,
Right.
PUBG and some games. They are not actually heavily using
Right.
any kind of financial services.
Right.
In India, less than 100 million people, they use Amazon.
Right.
Only 200 million people can pay online.
Right.
And then the banking service, bank application service, only 200, 300 million people use it.
Right.
So many smartphone users actually they don't use those services.
Right.
So if you see these smartphone users, smartphones is the one thing they have in common.
Right.
So
Correct.
they can enjoy Facebook, they can enjoy Google, they can enjoy YouTube. But as far as the financial services are concerned, it's
Mhm.
very different users. It's very different. So we are very highly targeting those users
Right.
who are freely using existing financial services like
Right.
banking services and other MFC services. So
Right.
actually we are very focused on those users.
Mhm.
From us it's like a 300, 400 million at least. So
Right.
actually we are focused on those users, how to build up their credit,
Mhm.
how to provide the services without any kind of online payment and the online credit scoring features, so that actually we can provide the financial services for those users as well.
Mhm.
So even though it's like they are all the smartphone users and the smartphone is the very big thing, they have a lot of data.
Right.
So but if you see the details of the smartphone users, if you divide them, I think most of the heavy the part of these users, they don't enjoy the service. So that actually we try to crack those users how to provide these financial services.
Very interesting. Charlie, how was the last year, right? So, I mean, I know it's not been a very good year in terms of growth for many, many companies in the fintech space, right? And I think, like you highlighted, there was a moratorium. There was, I mean, I think nobody knew really how to sort of deal with a situation like this, right? This was not a normal situation, right? This was an aberration, right? So, how's been the last year? And what are the next couple of years like, right? How are you gearing and preparing for, the India which is going to emerge out of the environment that we've been in last 1.5 years?
Yeah, actually, last year when we started last year, it was very good. Our plan was to achieve the profit last year, but after March, April, the Corona and then moratorium.
Right.
The moratorium is the thing actually, and our business actually decreased almost 10%, 90% business gone. So almost 6-8 months, our business was very low and bad.
Right.
But luckily, we got a funding last year from the good investors who can see the potential of our target users and then target product. So this year, actually, we have grown again, and then we are achieving BP break-even point this year. Right. And then the next year, actually, we are growing more than 3 times than this year. And then the yearly basis, we are gonna turn the profit next year. And then once we grow as we plan, then we are going public within 2-3 years timeline. Wonderful. So because we are providing financial services as well on top of the lending, we can have a bit edge and then competitive point for the financial platform and then even the neobank kind of a concept. So I strongly believe that within 2-3 years of time, our target users will grow, and then this is very big market. We see that, and we will prove that one, so that actually we can grow very fast.
Very interesting. And where do you see yourself in terms of your AUM's asset liability book, right, in the next 2.5 years? Where should that be? What's the aspiration of the leadership? I know it's a difficult question. And
one thing I can share that is like within 2-3 years of time, I think we can grow at least 7-8 times bigger than now. Right. And then our current plan is to go public within 2-3 years of time. So I strongly believe that we want to be the kind of the first player in India to include this next billion users, and then we want to be one of the first players to provide services to this in tier 2, tier 3, India to tier industry next billion users. So I really want to contribute the economic life actual transformation of those next billion people. Right. So many of my actual people told me that let's contribute 0.5% GDP growth every year from our own service. So that's very bold mission goal, but I really want to contribute 0.5% GDP growth from our service to India.
That's amazing. That's a very nice aspiration to have, right? It's a very positive aspiration to have, right? And I think I'd love to see each founder motivated with the same mission and intention, right? Charlie, how exciting is the insurance opportunity, for you, right? Because that's another product that you're looking at. So how exciting is the insurance possibility for you? Because that's again a very, very, that's a virgin market in its sense, right? There's just about, I think, under 4%, 5%, citizens in India who are actually insured, right? How large is that as an opportunity? And how excited are you about that?
There was a very interesting actually event last year and this year, actually, when the Corona situation got worse. Right. One of our heavy users, actually, they got the Corona insurance, like almost 2 lakh, 3 lakh of insurance, and then they give insurance to many underserved users. Right. So it was a very good thing, and then actually it was actually press as well. Right. So that kind of thing was there, but for now, actually, we are not focused on the insurance for now. Right. We are very focused on the lending, but definitely from next year onward, we are gonna focus on very small ticket size, like not the not the investment insurance kind of thing. Very small ticket size, autobike or COVID or dengue or mosquito insurance, kind of a very life, related small ticket size insurance. We are also planning to provide. So from next year onward, we believe that insurance can be one of the next business generator for our service.
Very interesting, Charlie. Charlie, what's keeping you excited, right? At a personal level, I mean, I know there is a very large aspiration that you have, right? As a parting comment, which is something, how do you, given that the market that you're in, right, which is such a high growth market, right, which also means that there is a huge pressure, right, on you as a leader, right? How do you, what keeps you, active, focused, cool and calm, right? And what will be your advice to many founders who are out there, right? Who are essentially in the same zone, are constantly chasing growth, right? So what will be your advice to them, right, to ensure that they can be as cool and as focused?
The startups, we were born to solve a problem, right? Basically, startup is to solve a problem because smartphone came, and then a lot of new business opportunity, and then the ecosystem changed. So we now have a very strong weapon to solve many issues. So smartphone basically, of course, smartphone is the startup based on the smartphone is very good, actually, the foundation for the business. But also, it's a very, very important foundation to solve a problem. So for me, as I told you, like as a genuine Indian, I see a lot of issues, coming in India, and then those issues coming together with the business as well. So when I see India market, especially our next billion users, whenever I see, like every day we are discussing the loan, every users complain and comment, and then what kind of problems they have when they get the loan. Those things are actually making me very, very actually energetic, because they need money, and then they are very good customers. Actually, they are not bad customers. They are very good customers. They just don't know how to get it and then how to repay. So whenever I see the problem, and then whenever our service can help them to solve that problem, I see the really the value and then the joy we are creating. So I can say like, in India especially, because there are many issues coming still there. So it's a value we can create. It's the joy we can create. So whenever we see the problems of the Indian society, I think it's a good opportunity, and then the good thing to face it, because startup is born to solve the problem, and then that's gonna be a very good motivation for you guys. So I think I feel very lucky and very, very fortunate to have a business in India.
Charlie, it was a pleasure. Thank you so much for taking the time out and joining us on this session, right? I sincerely hope that every one of us, each one of us is as excited as you are about the Indian opportunity. I think we are, right? But I think the fact that the way you're looking at that market, right? If we take a step back, it just helps us look at it and visualize in a very, very different way, right? More objective way, like you said, right? It was a pleasure to have you with us, Charlie. I think we look forward for this excitement to pass on to many others, right? And then to be equally excited about the opportunity. Thank you so much. It's a pleasure to have you.
Valuable time today. Thank you.
Thank you.